euro dollar chart. Euro dollar's been a dud as of late, but we're seeing a little bit of movement here because recently we just violated a low. Right, yesterday's close ended up taking us behind the low, and there is room to the downside. Right, we're at a lower level of consolidation, so it's not a clear path at all, but we can look for potentially a move down to the lows here. Either a stretch would be the 105 even handle. 105.50s is the kind of the midpoint psychological number if you're looking for one in here. And let's head down to a 240 chart. And you can see 240 chart, what do we have here? Right, we have a break and close below a VS1, right, that violation. So we had the violation here initially, small retracement, second violation, and now we're pulling back. So this is opening up the door for a potential pullback trade. And this is something you want to pay attention to in the lower time frames as well. So with the pullback trade, right, what we're looking for is, well, we're looking for a pullback. Price is currently doing so right now. We may be in a situation where we get two things. We may get that RSI dipping above the overbought level. We may also, if we were to do that, we would also get some hidden diversions, meaning that our RSI, meaning that we have, and then hidden divergence is always a little bit confusing, meaning that we have lower highs on our price chart, but higher highs on our RSI. That's a positive sign for a continuation trade, right? If you're a day trader, this is where you want to kind of really dial down into those lower time frames. This is going to be more of a day trading opportunity, most likely, instead of a swing trading or intraday swing trading opportunity, just because of the length of the setup. So day traders diving into the 15, and then we'll dive into our range bar chart. You can see we're moving up. Similar situation, nice double bottom, same as the dollar yen, but the location thing, so it wouldn't be a double bottom I'd be interested in because we're not really at a level, but you're going to see these things quite frequent. These can also be opportunities where you look for 2618 trades, or you do something, what did Jason call this? Jason Stapleton. He had a setup for double bottoms like this. It was it was kind of a more aggressive version of the Fibonacci inversion. I forgot what he called it. Anyway, 15-minute chart. Again, price action is pulling back. What we're doing is we're looking for signs of reversal. And we're looking to set up our trade, right? So going back to the hourly, and let me just get this to, going back to the hourly, right? We identified a few levels that we thought price can go to, right? We said, hey, we have two psychological numbers on the way down. We have 105.50s, and then we have 105 even, which you can see is at a VS1 level down here. What else can I do if I want to anticipate target selection? So that's what I'm working on right now. I know I've identified, going back to the process we spoke about yesterday, right? I've identified what price has done. I've predicted that I think price is going to go lower. Now I'm on the D section. I'm deciding, right? I know how I want to get involved, right? That should be in your trading plan. If this, then that. If this, then that. Now it stops in targets, right? So target levels, right? Me, I'm a structure guy. We've identified a few levels of structure. We've identified some psychological numbers, right? What else can I use? What else is important here? What can be thrown on my chart? Yeah, Fibonacci. Everyone's so shy, Horsey. It's always the same answer. It never changes. It's always the same. Fibonacci extension, swing high to swing low. And let's see if we get any numbers down at those levels, right? 127, 105.76, 1618, 105.62, right? So if you want to stretch up your 105.50 prediction a little bit, you can stretch it up a little bit higher, right? AB equals CD would be the same thing. But yeah, you start using your other tools to determine, is there a level that's more significant than the other, right? I don't know if we're going to see much here. It's going to be a little bit difficult, but let's put on our volume profile. And I may need to go to a higher time frame, but I prefer not to. And let's see if anything stands out. This is going to be a tough one because it's a very wide range. You can see the volume starts to, so again, massive volume in this big level, right? You can see our volume starts to open up around here at the bottom, and this is right below that 150 level, right? You guys see this? And again, it's not, you don't need to do super math. Just ask yourself is, which sticks out further, right? Which sticks out further? It's like a line of kind of, basketball players, and you have the one NBA driven person that's like 8 feet tall. And, well, that person stands out. He's probably the one going to the league, right? You can see a little bit of a void in here. And then our volume starts to pick up right here. So right around that 150 even handle. So I think that's good confirmation. And by think, I mean, we know. We know as much as we can know as traders, but that's good confirmation for that projection level. So I like that 150 even handle. If you want to be a little bit more cautious, 105.50 even handle, excuse me. You want to be a little bit more cautious, 105.60. So we got a good target projection level right there. Now going back to our trade here. So we know that potentially we could be looking for a trade that goes all the way down here. If you're a continuation trader, now don't get too excited. Don't get too excited here. If you're a continuation trader, we have a trade that goes all the way down here. What would a maximum stop look like? Right? We know a stop loss could be judged from our entry. We don't have an entry yet, but just kind of give us an idea. What would a maximum stop look like as you see a little VS1 level start to print? I love these things. I love that they form live in front of my eyes and tell me, hey, dummy, pay attention. I'm here. So a maximum stop, I think we agree it needs to be above the swing, the previous swing, right? We have our swing low, we have our outside return, we have our swing low again. Basic kind of reading of the trend rules above our swing. Yeah. So let's just plan out the worst case scenario, right? ATR right here is 7. Oh, jeez. Crazy. This is madness. 7, so that's going to put us at 34s. Right around here. So if you are a continuation trader, and this is why I tell you continuation, we spoke earlier about win rates and whatnot, and if you're, why a lot of successful traders don't really have win rates over 50%, but historically, a lot of successful traders are continuation traders, much more in the stock market than the Forex market, but the trend is your friend is still kind of the main saying in the market. If you can consistently set yourself up with a risk reward that looks like this, do you need to win 50% of the time? No. Now, some of you guys are saying, well, Keel, hold up, right? This is way too risky. Well, again, following up on more conversations we had during the week, right? How about splitting up our targets, right? What if we take a half position off at a retest of the lows? Or a portion of our position, could be half, could be quarter, third, whatever you want to do, depending on how you want to manage your risk and how you value this trade. What if we take a portion off here and then take our secondary portion off here? Well, you still got a good risk reward to number 1. It may shift a little bit depending on your entry reason, but you still got a good risk reward number to target 1. And then you got your freebie on. Or what if you don't take a position off, but you say, hey, if price action hits previous level of structure, then I roll stops to break even. That's active trade management. So you don't necessarily take things off, but you protect yourself on the back end, right? Endless ways you can do this. But the idea in trading is to, 1, capture profit as safely as possible, right? I'm not saying as quickly as possible, right? Because what happens when we say the word get profit as quickly as possible? What do we start doing? We start taking profits early, which is a no-no, right? So as safely as possible. And by safely, I mean we want to identify what we consider to be the first level of danger. So if we're making a bet, right, a pretty safe bet should be our first targets, where we should say, okay, price action should go, if we're right, price action should go here. If we're really right, then it could go there. We want to take our profits off at least partially at the should, and then hold on for our more aggressive targets at the could. Right? We don't always necessarily. I'm risk averse in my trading. I don't always want to shoot for the could. I'd rather get money on my should and then make extra money on my could. And if my could never happens, I'm still okay because I made money on my should. If you guys aren't confused by now. But if you are someone that shoots for the could, at least you want to reduce risk. Because if your could doesn't happen, I can't think of a rhyming word to go with stop losses, but you won't lose any money. Hope you enjoyed the content. Today's video comes from a recording from one of our live trading room sessions. Each and every week on the platform, we host 3 days of both a New York and a London live trading room session. So if you're someone that likes sharing and looking at trading ideas and reviewing the markets on a daily basis, if you're someone that just likes spending some time with a great community of traders and talking that trading talk, make sure you join us. It is part of your risk-free trial membership over on the platform. Just head over to www.tier1trading.com, sign up for that risk-free 14-day trial membership, get on the platform, join a live room, download some software, take some training, and start getting on your path to becoming a consistently profitable trader.